All right, guys. Good morning. Good morning. Good morning. Somebody give me a sound check, mic check, L check. Let me know if everything is good. Miguel, you guys hear me okay? Is everybody good? How's everybody doing? Good morning. Good morning. Good morning. Mic check, sound check. All good. All good. Starting a little bit early. Hi, everybody. Hi, 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 hi. Got a lot of cool things I really want to talk to you about today. Welcome, welcome, welcome. First order of business, those of you guys who are trading with me in BK in the Discord, I made a minor update to Scalp Trader just to fix some of these triangles, so the triangles are showing up properly. Most of them are showing up properly, like 90% of them are showing up well. So just simply go back to Scalp Trader, go download the new version, and I think it'll be adjustable. Like there's nothing major. It was just a tweak on the buy side of the triangles. I think most of them are showing up properly. It's as good as it's going to get, because otherwise I'm not going to spend my endless hours trying to hunt down the one or two exemptions. But otherwise, the setup is really working very, very well. Good morning, everybody. How's everybody doing? Give me a sound check. Tell me where you're from. We're starting a little bit early here, so we got time to schmooze. I want to let everybody in the room before we really start trading hard. So I definitely want to to give everybody time to come in here. I'm going to talk a little bit about the strategies that I'm trading, what I'm doing, how I really improved my entries and exits. Let me show you just kind of a review, and we'll talk about this specifically. Here's my trades in ES. This is my ES account today, right? So 2 winners in the ES already, right? Here's my trade in NASDAQ. Now, what you're going to notice, which is really cool, is that every instrument gets its own account. So here's my short in the ES. Here is my short in the ES. Okay, so 2 trades to the good in the ES in the European session, and then we can even go look at gold. Here's gold. Here are my trades in gold to the long side, to the short side, and that's it. Oh, and another one to the long side. And I missed a couple. I missed a couple to the long side. So you were talking about 3 winners in gold, 2 winners in NASDAQ, 2 winners in the S&P before the market even opens, right? That's what I like doing. That's how I like trading. Very, very clean, clear, crisp trades. I'll tell you, what I've been doing. I'll tell you what I realized, and I think is really, really important. I realized that the problem with all of us in terms of tilt is when, we go crazy, we over leverage, we overtrade. Tilt is basically a trading term for when you lose control. And you lose control in 2 ways. You trade too large and you trade too frequently, right? Those are the 2 ways that almost all of us lose control. Actually, let's do a first poll of the day. We're going to start a little bit early, but let's do a first poll of the day here. Good morning, guys. Good morning. Good morning. First poll of the day. I tilt by trading too big. Choose one. Choose one, please. Trading too frequently. I'm actually curious. Frequently. It's always a challenge when it requires spelling. All right. Give me some thoughts about how you guys tilt. So I realized that those are the 2 things that kind of put us to tilt. But here's the interesting part. The underlying reason for why we tilt is because we're focusing on making money. Everybody's focusing on the target of making money. And that is absolutely the wrong ass way of thinking about it. And that's when I started to kind of change things around. The last thing you want to do when you're trading is actually try to make money. Making money, as you see, is a byproduct of the system. The system makes money. Your job is not to lose money. And the number one way I lose money, and I wonder if you guys are the same, the number one way I lose money is when I add trades that are not part of my system. When I do trades that are not my setup. Easily the single biggest reason of how I lose money. Because then you're inventing as you go along, almost inevitably goes wrong, almost inevitably creates larger trades, larger size, less control, tilt. It's pretty common cycle for me. I wonder if it's a common cycle for you guys. I wonder if that's the problem you guys have. So I sort of started, I kind of almost subconsciously realized this, that, that every time I'm tilting, it's because I'm doing a trade outside of my setup, right? And then I want to, kind of change it. And then I realized sort of like the second reason where I'm tilting is if I am in my setup and the trade goes wrong, which of course it will, the trade goes wrong, I'm then going outside of my setup to make up that trade, right? So here's the psychological trick that I did that has really helped me. And I'm a type of person that really needs to, as I said, I'm a very sequentially oriented person. I like to do things one at a time, right? So what I did is I said, I'm going to trade one account for S&P, for ES. I'm going to trade one account for NASDAQ, one account for gold, right? Doesn't matter, if I miss a trade in gold, I don't care. If I miss a trade in NASDAQ, I don't care. But the point is that when I have a setup in NASDAQ, it will only be in that one account. When I have a setup in S&P, it will only be in that account. And so what that did, first of all, is it stopped polluting my trades. So you know how you're trading really well, NASDAQ is doing really great. Then you take S&P is doing great. Then you take a NASDAQ trade and it goes completely against you because NASDAQ is just a much harder instrument to trade. And you're like, oh fuck, now I gotta make back in the account. I gotta go large in S&P. I'm gonna go off script. Boom, 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 boom. An hour later, the account is blown. How many people raise your hand if you've done that? Right? Raise your hand. Yeah. So Rocky's telling me, BFF, be freaking focused, which is our motto. But it's not enough. At least for me, the best way to be focused is to know that everything is segregated, that I'm trading S&P in one account, NASDAQ in the other. This way, if it goes wrong in that account, I could give a flying fuck. I really don't care. Because it's just contained to that one particular account. It doesn't, pollute my overall trading behavior, which is really the key thing. That's really what I'm trying to do. Because the problem isn't the setup. You guys see the setup had 7 winners in a row. Could have had 12 if I took all of them, but I was busy. My daughter is sick from school today, whatever. I wasn't watching the chart the whole time. This I was watching here. I wasn't watching here. There were plenty of good trades over here that I could have taken, blah, blah, blah. For every trade we make, there are at least 5 more that we could make in my setup. That's the beauty of the setup. The setup is endlessly profitable as long as you follow it. The biggest problem is we don't take all the trades, and then when we miss the trades, we don't take the trades that we should be taking. We're taking just our own invented cowboy trades. So to minimize a lot of those things, I created 3 separate accounts. And I mean, the great thing about Apex, of course, is that all those accounts are cheap as fuck. I just put in the Apex link in here. You can do the 250s. or you can do the 25,000s, which are really, really cheap. I actually think that the smaller accounts are certainly much easier to hit target on, and you could control, the risk. Remember, I don't think I talked with you guys about this. Maybe I talked with my private group, but on the $250,000 account, I got to make 15, and I only have a $6,500 drawdown. So it's a 1 to 2 risk reward against me. Whereas on a 25,000, it's 1,500 up, 1,500 down, 1 to 1. Not to mention the fact that I'm trading small, right? And if I'm trading like $50 trades, $100 trades, I got to make like 150 trades to reach target on the big account, versus on the 25,000, I just got to make 15 trades, winners in a row. So to each his own. That this is the reason why I had so many 25,000s that I passed. I'm really trying to climb the much more difficult task of getting the big accounts funded, and also it keeps me, it forces me to just really, really grind it out, which is what I need to do. It doesn't, by making it hard, it forces me to stay in the game for 20, 30 days, maybe, to run this account instead of funding the account in 2 or 3 days. But absolutely, what I'm probably going to do is I'm probably going to take a couple of 25,000s and just, on the side, run those for a couple of days, see if I can get those funded. But regardless of whether you're trading the 25,000 account or the 20,000 account or anything in between, the 50,000 is sort of the sweet spot. The 50,000 is the best account in terms of giving you the greatest amount of drawdown against the most reasonable target. It's a 3,000 target against 2,500 drawdown. You could absolutely trade one large contract on the 50,000 in my strategy and be well within risk limits, and pretty much probably get done within a week, maybe 8 days at most, 8 trading days at most, if you're kind of trading it well. But the most important part, I really think that, and this may not be true to you, but if you are any type of a person like me that needs discipline, that needs control, that needs segregation, then separating the account by instrument is one of the best things you can do. It's literally the difference between you tilting and not tilting. So let's take a look at the poll. Now it's interesting. Trading too frequently is a little more than trading too big. That's probably true of me too. I will trade big occasionally, which is a big mistake. But probably my biggest problem is trading too frequently. And notice, by the way, first of all, last couple of days, I've really not been trading too frequently. But I'm hoping that this new paradigm of an account per instrument really keeps me from not doing, the stupid things, which is trading too frequently, right? Here's the NASDAQ. Let me show you. So this was a NASDAQ account, and I took that. This is a 52 account. So look at this. This was my NASDAQ trade. Nice and clean. Sell setup, red triangle, boom. Nice, clean one. I could have taken this one over here. I'm talking to you guys, so I wasn't paying attention. I don't know if this one would have been done. Let me see. This is 54. Oh, no, it would have been done. This would have also gotten done for a 5-point target. A lot of you guys are asking me what are like the stops and targets for all of these instruments. We're actually working on a banner, and I'm going to have like a nice clean banner that will always have my stops and targets. I'll have all the, you got to understand, I'm like the world's oldest YouTuber these days. So Grandpa needs a little, a little ramp up in using all the tool sets to get you guys informed as easily as possible. So I'm going to have all the banners properly, all the stops and targets, everything put up. Next week, we should have a really, really nice, clean layout for everybody on all those things. So everybody's raising their hands about my, where's the link? Chris, it's in the Discord. Okay. You want to do 3 different accounts that sums up 250K on Think Capital. Maybe I'm not sure how big the Think Capital on Think Capital. Let me explain to you. The size of the account is not the story. It's having three separate accounts. To me, that's the story in terms of separating each instrument in each signal, so that each account is working only one instrument on the scalp signal, which makes all the difference, right? It makes all the difference for that. Interesting. All right, guys. So trading too frequently, yeah, I definitely force myself to trade too frequently. Now, here's the thing that I was going to tell you. That's the other really important aspect of BK Scalper, and just the whole scalp strategy methodology, right? Let me find. Okay, let me. I want to find a losing proposition. Would this be a losing proposition? I'm coming in 96, 94.5, 96.9. All right, let's imagine. I think this is a losing trade proposition. So I'm looking for a losing trade because I want to show you something super important that you also want to keep in mind. This is the second component of not going tilt, of not losing control. So we have a buy signal. We have a buy trade. This is a buy setup, buy signal. We get long +5, +0.5, make 5 ticks. Beautiful. This is gold, right? The next signal, setup signal, is over here. The next setup signal is over here. The buy trigger is over here. Let's say I buy 96.1, right? 96.1. I buy 96.1, and it slides against me down to 94.4, which is 1.5 points against me, and I get stopped out, right? I get stopped out, right? Now, the trade actually eventually goes my way, but I get stopped out. What do I do next? Here's what you do not do, even though it may have worked in this case, but you definitely do not do this. You do not take the next green or the next green signal because it looks good and it looks like it's going to rally. Yes, sometimes it does work, but a lot of times it doesn't. And if you're taking the second or the third, very often you're just bleeding 2 or 3 losers in a row. Because if it goes up and then comes down, goes up, comes down, you're just bleeding 2 or 3 losers in a row. So it's really, really important. Again, this is where you can pace yourself. You take this trade, you get stopped out. It may take about 10 minutes for the new setup to even begin to coalesce. It begins to coalesce over here. You don't take the setup label. You only take once you get the trigger label over here. So from here, which is 7:48, you actually do not trigger till 45 minutes later, right? Sometimes it's half an hour, sometimes 45, whatever, until you actually get the second continuous setup structure. Then you have the highest probability that, yes, this is going to resolve. This is, I think, what's so important when we are trading these setups, is that we don't rush the trade after we lose. I do this all the time. I love to rush the trade after I lose. But honestly, if you've lost and you're trading in the next 5 minutes, 10 minutes, even 15 minutes, you've really lost. You're really, really lost. You've lost it all, because now you've given market control over your trading strategy. You're no longer trading your strategy. You're trading your fears, and that's never a good situation. All right, so what do we got here? We got NASDAQ sell setup, right? Really, really crushing. Okay, and not a surprise. Market open 935, which now doesn't set us up, but now prepares us for a possible sell trade. It may be 2, 3, 4 minutes. We need to go green, then we need to go red. But at least we know that there is a potential trade in the making, right? There's a potential trade in the making. On the S&P, there's nothing. And on gold, there's nothing, because this trade over here is resolved. And now, our only look is for the next possible buy setup to occur. So really the only legitimate, trade setup in the making is the S&P. And that's what we're doing right now. Kind of chilling with the villain. Let me know if you guys are clear on everything that I said. if you guys are following. If you want to get any of the indicators that we have going, I'm just putting a a discount link to our service, to my Discord. If you want to coach with me, I'm going to put the coaching link in here. Have fun. All right, let's stop this poll. This was a pretty cool poll. Where's my poll? What happened to my poll? Oh, here it is. I can't find it. Okay, we're going to stop it. So people are trading. The poll results are a little bit more people tilt from trading too frequently, which is all of these psychological barriers that I'm setting up for you that they keep you from trading. Guys, my apologies. I'm going to sneeze like a mofo today because it's fall in New York and allergy. Allergies are coming at me. So my apologies. If I sound like a slob, it's just this is one thing I cannot control. Oh God, sorry. Oh, so sorry, guys. It's just the net effect of fall coming to me. All right. Okay, I did want to. What was the second poll I wanted to do? We talked about trading frequently. This, oh man. I know what I want to do. That's okay. I'll survive. Thank you for all the blessings. I know what I want to ask you now. Here's another question I kind of wanted to ask you. This is just regarding prop. I'm assuming you guys are trading prop, right? So if you're not trading prop, don't answer this question. But on prop, on prop, I'm going to give you a range. I am trading 25 to 50K. I'm too lazy to type out the whole thing. 50K. This is just a range. Like, what are you guys trading as far as size? 50K to 100K, and then I'm just going to say, 200K plus. I'm just curious what you guys, where the sweet spot is for you guys in trading, in terms of trading prop. Let me know. I'm watching, the sell setup did not clear the green zone, so we got nothing going on over here. S&P is quiet. Here I want to show you. I think on the S&P on the 51 account, what did I trade? Yeah, this is it. Look at this. See, this is a classic Boris scalp setup. Scalp setup, trigger candle, boom, boom. Dollar bill. You can call me dollar bill because that setup just works like honey for me, like honey and money. Anybody watch Billions? Anybody ever seen that show? That's a Billions reference. That's a fun show. If you guys have never watched that show, it's on Showtime. And so it's a lot of fun. It's the first couple of seasons are a lot better than like the last 6 or 7, but the first couple of seasons are really, really good. And it's based basically on a very, very famous hedge fund manager named Stevie Cohen, who's trades out of Greenwich. And it's just really, really a fun show about how hedge funds work. It's actually very, very accurate. There's a lot of the guys who are creators of the show actually really did a good job on interviewing all the hedge fund guys. So it's a lot of fun. So that was a Billions reference to dollar bill. I think we should call my ES trade the dollar bill trade, because I'm always going for 1 point in the ES, and I make the money. So what's going on otherwise? Everybody having a good time? What are you guys trading these days the most? Gold, S&P. What's been the money maker for you? We're going to do that as a next poll, but I'm just curious. This is interesting. So Yeah, 50% of you guys are doing the 50K account. Definitely makes 25 to 50K. And then about 30 are going for the larger accounts. And then that kind of that middle, almost nobody's doing. Interesting. Yeah, it makes perfect sense. You either want to go for a really large capital allocation or for a smaller one that gives you much easier funding odds, right? Funding odds, which is kind of cool. So, by the way, yesterday, did I not tell you that they were going to take out the 5,900? Like, because they were just hunting for it. And then after that, like, the dam broke and it was just pretty much straight down all day long. The trade was really, really clean to the downside. So we sold off. Here's the first 10 minutes of the market. We sold off 62 to 300, about 60 points, trying to make a attempt through the moving average here. Try to create the green zone, and then we'll see if it creates a secondary sell opportunity for us as a sell function. Now's a good time maybe for us to review the very finer points of my scalp setup. Oops, let me put on my glasses because I can't see your comments. Gordon's saying poll results are showing our underconfidence and overconfidence. No, I think it's, everybody always attributes like irrationality to human behavior, but I actually think these are very rational choices on trading prop. I'm going to take the small accounts because I want the higher probability of success of funding, right? Because those are much better risk reward odds. So I'd rather take this, or I'm going to take the really large account because even though my risk rewards odds are much tougher, if I succeed, I'm going to have a much larger capital base to trade with, right? It all depends on your preference. And in fact, the preference should be both. I'm going to try and do both if I can, or do one and then the other. Like I've done one, and now I'm trying to do the other. But I don't think there is any, as long as you understand the trade-offs and the benefits going into the deal, your decision is very rational, depending on what you're doing. What are the pros of an Apex account over Top Step? Oh, Steven, is that even a question? All right. I mean, I'm not, it's not my job. I'm not going to badmouth Top Step. I'm just going to show benefits and drawdowns. Okay. You guys want to hear the benefits drawdowns of one versus the other? Okay. So the same, it's not that there's much of a difference. They're pretty much the same. In some ways it's 6 of one, half a dozen of the other. In terms of cost, I absolutely think that Apex is cheaper. Apex is cheaper to buy. Apex is cheaper to reset. Apex is easier in terms of functionality. But here are two things about Top Step that I absolutely fucking hate. I'm just watching the setup, so I'm going to focus on. Let me make sure I'm in the right account here, guys. Just one sec. The only thing we have, so we have 52s. I'm in my NASDAQ. Let me make sure I'm in my Tradeovate NASDAQ. I'm in the 52s. Just kind of watching, make sure that, that if I have a setup here, I will do it. But here are the two primary things I hate about Top Step. So how like a lot of prop firms have a daily drawdown, right? They say, oh, my maximum drawdown is $1 million, but my daily drawdown is $1, right? I'm exaggerating, but it's the same bullshit. So what that means is, and I'm watching this to see if I get a trigger here. What that means is, if you're in a trade, right? Let's say your drawdown is, just for argument's sake, your total account drawdown is $7,000, but your daily drawdown is like $1,000. So you have one bad cycle of a trade. You can't trade anymore. There's no way for you to come back on that day, right? Now, for some people that may be good because you're not going to it prevents you from tilting, but it's stupid in my opinion because very often it's just simply a function of the market giving you a couple of bad hits, and then you're just completely out of the market. And what if it's a great day? You're literally prevented from trading. So I fucking hate hate. Oops, we got it set up, guys. Sorry, let's work on this. Join ask. Right. Oh, I'm on the wrong. Sorry. Hold on a second. All right, I'm short. Naz, I'm sorry, I hit the wrong account. I made a tiny little error. I sold S&P instead of NASDAQ, and then right away realized my error. So now I sold NASDAQ at 83, and my target is going to be 78. Let's see if it works. And it works. Okay, sorry. Yeah, as I said, I can't chew and talk at the same time. I got to trade, then I got to explain. So you got me all riled up on Top Step. So I hate the daily drawdown, right? But there's another feature of Top Step, and I know they're working to change this, but until they change it, I will never fucking trade this account. So Top Step has like their cheap version. I forget what it's called, XFA account. I forget what it's called. It's their X account, whatever it is. It's their web-based version that is not Tradeovate, right? That is not Tradeovate. And in that version, the actual stop and targets are dollar-based, not point-based. Do you know how stupid that is? Can you understand how fucking retarded that is as a platform functionality? It means that 5 points in the S&P are completely different than 5 points in NASDAQ, than 5 points in YM. Yet I cannot have a stop and target that's adjustable in points. It's only in dollars, which means it's completely inflexible. And you can't even change it. You can't even like pre-configure it to like lots of different stops and targets. So they know that needs to change, and they're working on it. But until that does, no reason for me to trade Top Step. So this is my rant and rave on Top Step for right now. Let me see what S&P is doing. Yeah, sorry. So this was a mistake on the S&P. Let me see what S&P is doing. I'm sorry, guys. I missed the S&P trigger. The S&P had a sell trigger. But, we can go to I think the easy thing to do now is kind of for us to look at two. Let me get rid of this. Sorry. Okay. Okay. So this is NASDAQ. This is S&P. I did not take the S&P trade. This is just a false trade in the wrong account, because I had the NASDAQ signal and I had the S&P signal pretty much at the same time. So sometimes that happens, and you have to choose one or the other. My preference is always to trade the S&P, but I was trading NASDAQ. It doesn't matter. We made money nice and cleanly in that trade. So Karen says she trades both. Karen, am I right? I mean, I could be wrong, so I don't want to mislead people. Am I right that in Top Step on their cheap platform, you have to set stops and targets only in dollars, not in points, and that really limits your flexibility? Or maybe you don't care. I'm actually curious. Let me know what you guys think about that. Guys, those of you who are listening to me on Twitter, come on over to YouTube. Come hang out with us. We'll do a little bit of polling. We'll do a little bit of trading. We'll do anything we like. So I'll end the poll here. Very nice. We're more or less equally balanced, but I think you guys are right to trade the small accounts first. Okay, we have a second setup. Let's kind of watch what's going on over here. We have a second setup label in NASDAQ, right? Probably the next setup trigger is going to be viable, probably. But I'm watching this, right? I'm watching this pretty carefully, and we're starting to really, really, really separate from our value line. This is the 200 period SMA. Once we get to about 3 labels and a really, really steep move away from the value line, I'm actually going to be looking for reversal trades. Now, this is my own personal twist on the setup, my own personal preference. You don't have to do reversal trades. In fact, if you just did nothing but trend trades, continuity trades with all my setups, you'd be a much, much better trader than I am. But if you're a type of person who likes to buy bottoms, sell tops, this is the only rational, functional way of doing it. And if it sets up, I'll trade it. If it doesn't set up, I won't trade it. But we'll keep an eye on it. All right, we're watching both charts. For a second, let's take a look at what's going on in gold here. Gold is above trend, but kind of peeling off a little bit, coming back down. Gold is really not doing much. So we go back to the S&P and see what it's doing right now. So the S&P has resolved. Here's a sell label. Here was the sell. Boom, you resolved. The NASDAQ now is creating a second sell setup. We have a sell setup. It'd have to go green. Then it'd have to go red. Give us a triangle, and then we could have another trade in the S&P. Oh. Okay. Interesting comments from Karen. I'm going to read them out. As long as you have TSX playing for me, you don't really have a daily stop. Okay. So in the TSX, there's no daily stop. And then if you trade only one target, I guess if you trade only one product, which is trading NQ. So, okay, that's actually a really good point, right? So, it dovetails with what I'm talking about right now, which is I'm trading one product per account. And I guess you could do the same thing in Top Step, right? You could do, one product per account and do that. But, I just find Apex really so much more flexible for all of these things because I don't have to think about any of it. I can just modify it on the fly. But yeah, that's a very good point. That's interesting. Karen says she trades trend in Apex and counter trend in TSX. Interesting. That's another way by the way of doing it. That's you can segregate also by style, right? Generally, these are all really good ideas in my opinion. Really, really good ideas. The more, like the common thing is like the more you stuff into one account, the better it is. It's actually the worst. Trading is not like cooking. The more ingredients you put into it, the shittier it's going to taste because it's going to pollute. The trades are going to pollute. You really want to separate as much as possible by strategy, by structure, and even by instrument. So I've separated by instrument. It's actually not a bad idea to separate by regime. So you just take trend trades in one account and counter trend trades in the other. It gets a little crazy. You don't want to have 10 accounts because that becomes a problem in and of itself. But having 3 accounts, I'm okay with. Maybe having a 4th as a counter trend account is not a bad idea. I may consider it. It's not that it's super. To show you how this works practically, let me just show you my trade evade. Oh, where's my trade evade? What happened to my trade evade? Where do we go? Oh, here's my trade evade. So all you got to do is I know 51 is my S&P, 52 is my NASDAQ, 53 is my gold, right? So I just simply flip around between each. Now, occasionally, yes, I'll forget. And sometimes what happens is you're on the wrong tab. So you got to do two sequences. You got to have the right account and the right tab to trade it, but it's not that difficult. It's not that difficult to set it up. You could probably even set up like 2 or 3 ladders and just simply trade each ladder if you wanted to. I haven't bothered because it's not been that big a deal. All right, let me take this. Hang on a second, guys. Let me find you my charts. Here we go. Here's the charts. And let me make sure I have control over there's my trade evade. Okay, very cool. Yeah, so it's really not that hard. You see how simple it is. Once you kind of master the platform, it's very much a point and click process. So we made money in NAS, just waiting to see what. Oh, there was a sell in gold, right? Gold had a sell. Interesting. Okay, so gold has a sell. Gold has been struggling with that 2,700, right? Those of you guys who've been watching gold's been really, really struggling on 2,700 here. So gold might be a setup for us. We know we have 2 possible setups. We have a possible sell setup in NAS, possible sell setup in gold. Here's an interesting twist to my whole scalp, and I'll tell you how I traded. You guys are welcome to ignore it or follow me. So you see how the price is below the value line, right? So that naturally, it's only going to show a sell setup if the price actually closes below the value line, right? But then it may run above the value line, create a green zone, and then create a red triangle. And even though the red triangle is above the value line, it's still operating off that sell setup. I will take that trade. It still tells you that the more dominant trend is to the downside. You can actually see, I wonder if you could actually, yeah, here's a good example. Here's the sell setup below the value line, rise above the value line over here, gives you the signal. If you took this signal, it was a beautiful trade, right? You could absolutely take that signal as a potential trade. So that's how I interpret, the whole process. Look at that. We're basically dropping $10 off the highs today in gold. Gold is really, really coming down hard. So very likely we get a retrace green here in gold, and then possibly a gold setup. So if we do, we'll go to the gold account and trade it. I'm actually going to go to my gold account right now. Oops, it's a 53 account, and just kind of set myself up for it. I wonder now that I'm kind of obsessed with, I wonder if I could do this. Can I do a double? Add super dom? New dom. Yeah, I could. This is cool. So I could actually create 3 DOMs. And let me see if I do GCZ4. Oh, cool. Select. Oh, wow. I could have 2 DOMs trading side by side. That makes it even easier. So basically, the only thing I do in my Tradevate is just a pure execution platform. Everything I do as far as setups and visualization is all done on TradingView. So here, I'll show you guys basically, here I set up 2 DOMs, and I could have 3 DOMs. And that way, this will be gold, this will be S&P, and the third one will be NASDAQ. And then you don't even have any confusion. You can just sort of, trade it that way. It becomes super easy if you want to separate the, the structures. Oh man, what's going on with 7-Eleven? Okay, green zone in NASDAQ. So now, now we can kind of like go to my NASDAQ account, set up my NASDAQ DOM, and see if we get a NASDAQ signal. So NASDAQ, rallying back up 245. Let's see, maybe we'll see how much rally there is in NASDAQ here. Generally, markets are pretty lackadaisical today, right? I mean, it's a quiet week. It's a non-data week. We had some pretty good earnings, but like other things are, valuations, just tiredness, I think, is kind of kicking in here. We're spending much more of our time under the value line than above it for most of the times, right? So it tells you that maybe we're ready for a little bit of a correction. I would not be surprised to see 20,000 on NASDAQ either today or tomorrow. Not quite there yet. Not quite. No red signals. Remember, we don't move until we get the signal. No signal. It buys us another 60 seconds of watching. Watching gold also. See what's going on over there. Just check something. I think the S&P doesn't even have a sell label yet. No sell labels. Nothing on the S&P, so it's nothing of interest for us. Okay, setting up a triangle, possibly a sell trade. 19 seconds left. Got to hold it. Again, we don't move until it closes. All right, short at 25 and targeting 220.50. We'll see if it works. May retrace a little bit on us. We'll see. Done. Nice and clean. So let's go through the mechanics of this trade, right? This is a second trade in a sell sequence from the start of the day, which is pretty much my maximum probability envelope. After on the third try, I'm a lot less likely to want to take that trade. Now again, remember I taught myself to trade trend. I'm not naturally a trend trader. Those people who are very comfortable with trend will take sometimes 4 or 5 continuous signals, and you're great, good on you. But I feel very comfortable only with the first 2. Only if the third one is relatively close to the value line will I try to take the third one. But if you are going to commit to a trend signal, to a continuation signal, do not blink. Take the trade. I took the trade at market, right? Because if I was trying to get cute and put myself to limit entry, and it missed, and then it would drop like a stone, I would have missed the opportunity. Then it would have retraced against me, put me into a trade, and probably made a V-shaped move and stopped me out. So if you're committing to the setup, commit to the setup. It's got to complete, and then you commit to the setup. Let it hit. If there's enough momentum, it's going to happen. If there isn't, you're going to get stopped. But the key thing is you got to commit at the beginning. So this was a good example of me just kind of committing to the setup. Meantime, gold just dropping like a stone here, right? Looking really, really ugly. We have to wait very patiently here to see if it creates any kind of a retrace move over here to the upside, so on and so forth. Oops, sorry guys. NASDAQ is done for us. We're going to look for the next sell signal cycle, but that could be another 10, 15 minutes away. You see, by the way, how cool this is? Like I'm not over trading. I'm taking one trade every 10, 15 minutes. I'm hitting it. I'm moving on. It's just psychologically, it's just a much easier state of being. Because when you're doing one trade, second trade, third trade, you naturally just spend so much dopamine on each engagement that after 5-10 minutes, you're vibrating with too much adrenaline. It's like another really bad thing about over trading is you're just vibrating with too much adrenaline. Oh my God. So what are the comments here? How do you get the indicator? 505 cult. Just here's the discount link to my Discord. You can try us out for a month, or if you want to, you can join me in coaching, and it gives you a 3-month deal. Since, as per poll, 42% trading with MT4, MT5, how about show us how to trade CFDs on this platform? So, Dorian, you're reading my mind. Tomorrow, we're going to dedicate. Thursday is going to be CFD day at BK. Oh, we're getting a sell signal. Okay, let me focus, guys. Sorry. Let's focus on gold. Going to the 53 account, looking at gold. Let me look at this. Okay, I'm in gold. I got 18 seconds left. 5 seconds left. Let's see if this candle holds. 1 second left. Sell market. All right, I'm short gold here at 91, and I'm targeting 90.6. Let's see if this works for us. Gold has had a big sell-off, so it may retrace up, up my ass, or it may not. We'll see. We took the trade because it was the setup, but it may retrace against me, and if it does, it does. Yeah. Okay. So first loser of the day, and that's perfectly okay because, gold had a big sell-off. Not, the the continuation just didn't work. And now this is what I want to show you. So now I'm in my gold account, right? And it's fine. I'm going to wait now for the next cycle signal. So maybe the next cycle signal is actually going to be a buy setup the other way, or maybe it will actually again create a second sell signal as the second wave comes in. I don't care. It's going to be a 10-15 minute wait. It's fine. I'm not obsessing about gold because it's totally my separate account, right? I can go find opportunities in S&P, anything else that's taking shape over here or not taking shape over here, whatever is, nothing is really going on here. So, NASDAQ has worked out beautifully for us. S&P worked out beautifully for us. Gold was like, 2 winners, and now this one, I eat it. Next time I get a chance in gold, maybe 15 minutes from now, I'll take it. And very, very confident that that's going to probably resolve my way. But regardless, what this does is it just puts a circuit breaker on me trying to chase and repair the gold trade right away. Gold trade is going to be a little bit of time for us to consolidate, right? And yes, it may go back to the red and just totally drop like a stone. It doesn't matter. It doesn't matter. I'm not trading gold until I get the next cycle set up, because then I'm going to have a lot more confidence in the trade. All right, so let's focus on. Okay, I am trading. So 505. I'm trading one contract on these things, which is very, very small on a $25,000 account, for a whole bunch of reasons. One of these, and the most important reason, is if I'm starting with one, there's very little chance I'm going to hit my drawdown and lose my account. And that's a good habit to be in, because when I get the funded account and I'm trading the funded account, it's very, very easy. The easiest way people lose their funded account is they get large. They get large because they're used to trading large, either from eval or because they think, oh, now I got real money, I'm going to trade large and make it all back. And that's the easiest way for them to lose their account. Prop firms love it when you trade large. It's like, the casino just giving you free drinks. They know you're just going to fuck it up, and they're never going to have to pay you out. So essentially, by trading small on the eval, it habituates me to trading small on the funded, and then I'm able to control my risk much better. So that's number one. And then it also gives me a chance to repair it at 3 times the size on the next trade without ever triggering any of my risk parameters. So yeah, that's basically it. Those are the reasons. Yeah, M321. I will trade 3 times my size. Maybe I'll trade 2 times my size. That's another thing that. Oh, we have a S&P buy. Interesting. Oh, it's buy underneath the value line, so it's not going to show up. Remember, the alerts are going to show up, but not the signals, because that's the whole point. The alert is kind of just telling you what the tonality of the market is, but the actual setup is is not going to show up, which is exactly what we want. So it's fine. It's a little bit early. Here's gold after doing a big dump from 207, kind of trying to re-enter its second sell wave, right? So we'll see if that second sell wave holds. Oh, I totally lost my train of thought. Somebody was talking about MT4, MT5, CFDs. So maybe tomorrow, I'm not sure yet, but definitely Thursday as a general rule of thumb, I'm going to try to make it CFD day. We're going to trade the Think Markets account instead of the futures account, just to get everybody, comfortable with, the other platform and how I would trade it and so on and so forth. I can't, because an American, I can't have MT4, MT5. So on Think Markets, I still have to do, or Think Capital, I still have to do a trading view. But yeah. Is there an advantage of 250K Apex over 50K Apex? No, there's actually a disadvantage in terms of risk rewards, because it's much easier to fund 50 than it is to fund 250. The advantage is that if you do fund 250, you're funding with 250. You just have a much larger account, much larger size, all that kind of stuff, much larger margin. Yeah, S&P is really just stuck in the mud. NAS is pretty weak. Today is pure chop day, guys, right? Pure chop day, right? And just, again, I want to show you why it's stupid to butt your head against the wall more than once, right? So I get stopped out. Former Boris would go, oh, I got a second red. Bullshit. Now it's really going down for sure. I'm going to get short here, right? Depending on where I get executed, maybe I get executed a little bit lower. This may not make target. And then I get retraced up my ass again, and I get stopped out again. So now I'm 2-0 unnecessarily. And sometimes I would say, oh, fuck this. I'm going 3 times. And maybe this time it does work, right? The third time, or maybe it doesn't, and then retraces up my ass. The point being is utterly unnecessary to put yourself into a vulnerability position when you can just wait patiently. If there's going to be another sell wave, the sell setup will set itself up. And if this is just consolidation at the bottom of a sell wave, then you're an asshole trying to sell bottoms. You're just doing nothing but desperately trying to get back like a crack junkie the money that you lost, instead of trying to figure out how to make the next intelligent trade. I'm talking to myself, by the way. I'm calling myself an asshole, just to let you know. But my point is that is a dynamic probably many of you have experienced in life, and I'm just telling you my own lessons out of all of this. S&P above value line, we're in buy territory, right? Maybe we get a buy signal on the S&P. Let's see. Don't be a crack junkie. That's right. Don't be a crack junkie. That's like a 1980s reference. So many people don't even know what crack is at this point. God, I know. I'm making all these old references. What did I say yesterday that was like totally aged me? It was some kind of a 1970s reference that I made. Jesus Christ. It was, oh my God, I totally forgot. But I was like, God damn, that is, I sound like an ancient person. All right, so we're watching. Guys, just to let you know, I have a gun to my head for about 10. I really would love to hang out with you much more, but I got about 10 more minutes. If I get a setup, I'll take it. If I don't get a setup, you guys got a very good feel today. We had like 4 or 5 quality setups. NASCAL buy means what this is basically showing you, just kind of let you understand on the setup. Because I'm suppressing non-trend signals, that is, I'm suppressing buys underneath the value line, it's not showing it to me. But if I didn't suppress it, you see there was a buy setup over here, right? That's all it is. It's good to know. It's interesting to know because it tells you that we may be in the midst of a turnaround, in terms of trading. So still watching markets. By the way, apropos of nothing, let me see. Hold on a second. What do we have? I have a buy signal in gold, which is another great reason to not have sold all of these things. Gold may have just kind of bought. This may have been a profit wave, right? This is a profit wave, and gold is going right back up. So trying to force yourself into a sell position because this one didn't work, really, really kind of stupid, right? So I'm glad we didn't. The new Boris did not press that trade. Okay, S&P actually clears the value line, so we're now in a buy territory for S&P. Nasdaq's still underneath, gold's still underneath, but it's interesting to see. Oh, so I was going to tell you that the ODP strategy, my continuous trading strategy, finally done. The MT4s, MT5s are done, which means I'm going to be able to set up a webinar. This will be a free webinar for everybody who wants to see how this thing works in real life. It's been killing it. I mean, just killing it on a continuous basis. It was up like 17,000 this, like 17% this month on a 100,000 account. It has a little bit of a drawdown today, but here's the beauty of it. Even when it takes a drawdown, because it trades like 4 different instruments, the other guys are making up for it. So it's really very, like when it takes a big hit, it's actually a very, very small P&L hit to the account. I'm just looking at this. US 30 got clipped out, but everything else was making money. Really interesting. So, I really, really like this. I really feel so good about this continuous robot that trades better than you strategy. I'll let everybody know when we do. It's gonna be next week, maybe like next Wednesday. I'll do a webinar like 7 p.m. New York and preview it to you and show you all the things that it does. I think you guys are gonna really, really like it. Those of you who have an 8cap account, let me actually give you the link to 8cap. Our friends at 8cap are essentially going to pay for it if you guys open an account with them. So that's really, really cool. If you can't open up an account with 8cap, then it will be a fee. But my friends at 8cap are going to completely subsidize this thing for you, which will be really, really nice. All right, I'm watching S&P clear the value line. NASDAQ coming back up, gold coming back up, right above the value line, but kind of holding. Now this is where it gets interesting, right? So gold had a big move to 2,700, came back, corrected $10. Now it's at the value line. So now this is where I find it fascinating. If we go red, it's probably going to give us maybe a second sell wave setup, and if it does, we're going to try to resolve it. If I have time. I got 5 minutes, so I don't know if it's going to give me a signal. But basically, you get the idea of how the narrative of the day develops and how, when you take one instrument at a time and just follow it and follow the rules for that one instrument, you have a much easier psychological and financial management system in place to control your worst impulses, but also to do your best work, to trade continuously. I'm actually curious. I wonder what happened. Let me just take a look at where's the Dow trade? It's probably not set up. It's not setting up. I have to do. It looks like it was really, really choppy. I don't know what how did I get? Let me see something. I'm trying to figure out how it got stopped on the third sell. Was this? Oh, it didn't go. This was the third. No, why would it sell? It was straight up from 945. Huh. Am I looking at the right instrument? Yeah, Dow, US 30. US 30 is a buy. Why am I selling these things? Sell here, sell here, sell here. Maybe it was. Sorry, I'm just trying to figure out when I was selling this. 1639. Or maybe it was over here. Maybe it was. Yeah, maybe that's what it was. It just got chopped up over here. That's what a Dow got chopped up. When you get this kind of high volatility chop up, third, fourth level. That's where I got chopped up on the Dow. All right, no problem. All right, 2 more minutes. I hang with you guys. Yeah, NQ, gold clearing the value proposition. S&P, NQ, not quite there. So for us, the way I have it set up is, if I'm underneath the value proposition and and I have lots of buy candles, I'm doing nothing, because I need to have both. I need to have the price action in sync with the longer term trend. So now gold finally breaks above. If I start getting buy signals, those are going to be legitimate trades. Similarly with the S&P, I think we're clearing. Yeah, we cleared the upper trend. Now if I get a buy signal with the S&P, that's going to be a legitimate setup for me to take. You see how this forces you to do the proper thing. It's not that it's always going to be the successful thing, but it's always going to force you to do the proper thing, because it forces you to be in the context of what you're trying to do, right? All right, guys, I got to run, much as I love to hang with you. We had a pretty good day. I mean, there's only one bad trade, which was the gold trade, but we did the NASDAQ trades, we did the S&P trades, we did the earlier gold trades. All of those worked, and there'll be plenty of good trades for the rest of the day once the setups start popping up. So hopefully you guys really, really enjoyed. I'm going to leave you again with a link to Apex. Be sure you nail a couple. If you take 3 or 4 accounts and put each instrument into each one account, I'm telling you, you're going to feel so much better in terms of trading it. And tomorrow, I'm actually going to show you. I'm going to set up the 3 DOMs in my Tradeovate, so that I'll show you exactly how you could configure every single DOM to the instrument that you want, so that you're never going to make a mistake. You're not going to have to make a switch, a tab. It's just going to be single click execution, a function. Okay. All right, guys. Everybody have a wonderful, wonderful day. Thank you so much. Really, really a lot of fun trading with you guys today. Another good day for us in terms of trading. I'll see everybody tomorrow. Everybody have a great day. I'm going to post. I haven't posted tomorrow's link, but it will definitely be 9:15 link. I'll post it up a little bit later. Everybody have a wonderful day. Talk to you later. Bye-bye.